can you claim your girlfriend or your boyfriend as a dependent on your tax return? The answer is yes, if they are basically leeching off of you. Now, I'm saying this because this can help you get more benefits on your tax return, reduce the amount of tax you owe, and it can also help you qualify for things like an offer in compromise, a hardship-based installment agreement, currently non-collectible status, things like that on existing tax debt. Now, I'm not going to get into why claiming dependents help you on your tax return. It's fairly obvious. If it's a qualifying child, you can qualify for the child tax credit up to $2,000 per year. If they are a dependent who's not if they're a child that qualifies for the child tax credit, you can get a credit for up to $2,000 per year. If they're a qualifying child who does not qualify for the child tax credit, or a qualifying relative, which is the other kind of dependent, then you could get a credit for other dependents up to $500 per dependent per year. But on the resolution side, right? On the resolution side, a lot, which is meaning getting into an agreement with the IRS, negotiate on your back tax debt. A lot of the analysis, a lot of the calculus has to do with what is your monthly disposable income by the IRS's math. And the more people you have in your household, whatever the IRS considers your household, the more expenses you can claim against your gross income in calculating your monthly disposable income. If this is already starting not to make sense, watch my video on the offer and compromise formula. Link to that video at the top of the screen. I'm assuming there's some basic knowledge here about how the IRS calculates monthly disposable income. Okay, because for things like the National Standard Program with the IRS. Okay, so the IRS just gives you a number that you can deduct against your monthly gross monthly income for these things. Okay, food, housekeeping, apparel, personal care products, miscellaneous. This is called the national standard amount, right? And if it's just if the IRS considers you a household of one, this year that number is 808, right? But if you have 2 people, it's more. If you have 3 people, it's more. If you have 4 people, it's more. If you have more than 4 people, then you can add 386 to the 4-person allowance for each additional person. How do you know how many people, are in your household? Well, it says right here, generally the total number of persons allowed for national standards should be the same as those allowed on dependents on the taxpayer's most recent year income tax return. And that's in the IRM as well. Here in IRM section 5.15.1.8, allowable expense overview. I lost it. Here it is. Right below my face here. Generally, the total number of persons allowed for national standard expenses should be the same as those allowed as dependents and taxpayers claimed on the taxpayer's current year income tax return. Verify the dependents claimed on the taxpayer's income tax return to meet the dependency requirements of the Internal Revenue Code. There may be reasonable exceptions, right? For example, foster children or children for whom adoption is pending. Okay, but generally, what they're going to do when we go for a resolution with the IRS, and one of the most basic questions is, what's the taxpayer's household size? They're going to look at the most recent tax return and make sure that matches, right? And if it doesn't, it's got to be a really good explanation why it doesn't match. And most of those explanations don't fly. Okay? So, this means... Now, first, let's get into how could a girlfriend or boyfriend or fiance qualify as your dependent. Okay? Well, if they're your girlfriend or boyfriend or fiance, then they're not a qualifying child, and so the only kind of dependent they could be is a qualifying relative. Okay, and so it gets a little more complicated than this, but there's a table here in IRS publication 501 that lay down the basic rules to be what's considered a qualifying relative. And no, they do not have to be related by blood to you. Okay? So here's the qualifications. The person can't be your qualifying child or the qualifying child of any other taxpayer. Okay, well, easy enough. The person either must be related to you in one of the ways listed under relatives who don't have to live with you. So if your girlfriend or boyfriend doesn't live with you, you're out of luck. Okay, you can't claim as a qualifying relative, because qualifying relatives who don't have to live with you are limited to really blood relations or close relations by marriage. Okay. Child, stepchild, foster child, brother, sibling, this kind of generational thing. Direct ancestors. Okay. So, your parent, grandparent, great grandparent. Steps work. Nieces and nephews work. Nieces and nephews of your half siblings work. Brother or sister, your aunts and uncles work. And it even goes so distant as, siblings-in-law or children-in-law. Okay. And any of these relationships that were established by marriage aren't ended by death or divorce. Right? So if you get divorced, but you still support, for whatever reason, your mother-in-law, let's say you really love your mother-in-law, after divorce, you're so close, you support, that would still count. These folks, and only these folks, actual relatives, don't have to live with you in order to qualify as a qualifying relative. However, and where's that table? Am I going to be scrolling here for a while? Maybe I'll pause this. However, there's a second thing here. The person either must be related to you in one of the ways under relatives who don't have to live with you, scratch, it's not your boyfriend or girlfriend, or they must live with you all year as a member of your household, and your relationship must not violate local law. Okay. And this is, I think there still are in some places some local laws that prohibit cohabitation between significant others who are not married. I don't know, but I think that's why that's in here. So basically, your boyfriend or girlfriend would qualify as this if they live all year with you, right, as a member of your household. Now, here's the hardest part. Here's the hardest thing about qualifying relative. The person's gross income for the year must be less than $4,700. That's why I said they got to be leeching off of you, right? Because I don't care where you live in this country, and this is this is per year. Per year, folks. This is less than $400 a month. They have to be making gross. This isn't after taxes taken out of your paycheck. Gross, less than $400 per month. Okay? So I hope that wasn't offensive when I said they had to be leeching off you. But look, who can live off $400 a month these days? Nobody. Okay? You basically got to be their sugar mama, their sugar daddy, right, in order to claim them as a qualifying relative. Okay? And that it goes without saying, if they're making less than $4,700, you must provide more than half of the person's total support for the year. Now, maybe it doesn't go without saying, because maybe they might make less than $4,700, but their literal mommy or daddy is covering their costs. Okay? And if their literal mommy or daddy is providing more than half of their support during the year, you can't claim them even if they live with you. Okay? But if you are their sugar mama or daddy and they meet the test, you can claim them. Okay? So yes, it is possible to claim your boyfriend or your girlfriend or your fiance with one E or your fiance with two E's. I forget which is which. Or, any other kind of thing. It doesn't have to be a romantic relationship. It can be a friend. Right? The person, doesn't say your lover, the person must live with you all year as a member of your household. Okay, that could be a friend. It doesn't have to be a girlfriend or a boyfriend. It could be your friend. It can be kind of a rando. As long as they meet this stuff, they live with you all year as a member of your household. Now, maybe random wouldn't count as a member of your household, but I think you're kind of getting the idea here. So, how does this tie into tax resolution? Well, it can help you claim more expenses, okay, against your disposable income in calculating, for IRS resolution purposes. And we just had a case the other day where the dude's mom lives with him. She makes less than $4,700 a year. Social Security doesn't count. Right? Well, if the only thing you're getting is Social Security, it doesn't count. Okay, for the $4,700 test. Only thing she was getting was Social Security. Then it'd be if you're getting a lot of Social Security, it becomes difficult sometimes for the other person to provide more than half of the person's support. If you're getting, $30,000 a year in Social Security and you only need $50,000 a year to live. But anyway, we went through all the tests. He could claim his mom as a dependent. He didn't realize this, and he didn't claim her. And mom filed her own return and kind of claimed herself, right? But it would save him so much money in his partial payment installment agreement to claim his mom. Because then he could get the national standard for 2. He could get a local standard for housing. I think it saved him about $1,000 a month in his installment agreement, which over the length of his installment agreement is saving him tens of thousands of dollars. That's going to be written off at the end of that he would have had to pay had he only been a household of 1. Okay. Sometimes it's not so easy. Mom wasn't really getting a huge benefit. So actually what we do is mom amended her return to check the box that says I can be claimed as a dependent. We amended his return to say that he could claim his mom as a dependent, right? To make this happen, to get this to work. Sometimes it's not so easy. Mom wasn't really getting a huge benefit by claiming herself. Sometimes, though, it's trickier. Why? I had a case recently. Taxpayer lives with his fiance and her son from a previous relationship. Neither one of them, well, she makes less than I think she works, but she makes less than $4,700 a year. The son, I think he's like, I forget how old. Not even a teenager. He doesn't earn income, right? It seems that our client could claim both of those individuals as relatives, a qualifying relative. Okay, both of those individuals meet these tests. They lived with him all year. They both make less than $4,700, and he basically pays all their living expenses, right? Well, more than half anyway. So he could claim them. And we said, hey, why don't you discuss this with, your fiance? I mean, she actually should be checking the box on her return that someone else can claim her, right? And look, I understand she may be getting some benefit for claiming her son, right? Some money back in her pocket. But that's going to be minimal to you. Why don't you just, if she wants that money, just pay her that money, right? Because whatever you have to pay her to make up the difference there is going to be minimal to whatever we can save you in your resolution by calling you a household of 3 rather than a household of 1. And we were really pushing for this to happen because instead of basically, I think, paying the IRS, man, it's been a while, but paying them, I think, like $1,500 a month, we could have got that down to like $200 a month. Big old PPIA, big old write-off at the end, right? I think it was still a PPIA, but not as juicy a PPIA as if he was a household of 3. Okay. So, and I don't know. I mean, we can't make anybody's boyfriend or girlfriend or fiance do anything like that, right? And, obviously there's issues there. We can just advise, and that's the best we can do, and explain the situation. And if they can convince their significant other to let our client claim them or their child for the year, great. If not, hey, there's only so much we can do. We can't force anybody to do anything they don't want to do. So, anyway, folks, I hope this was informational, educational. So if you have any questions about this, I know it's the whole dependent thing. It's more complicated. Or it can be more complicated than just, these 4 simple steps or questions. Any questions, leave them in the comments below. I have other tax relief videos here on the left-hand side of your screen. And of course, if you are facing tax debt of $10,000 or more, give us a call at Choice Tax Relief, 866-8000-TAX. That's 866-8000-829. Or fill out the form at choicetaxrelief.com, and we will reach out to you. Thank you so much for watching, everybody. See you in the next video. Bye-bye.